The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour. I am your host, Darrell Martin, here at TFNN.com. And if you have any questions, feel free to call in and ask. 877-927-6648. Again, that's 877-927-6648. And let's go ahead and go through our daily diagnostics. We're looking at fundamentals, statistics, seasonals, and technicals. So be aware that we do have a seasonal coming up right now. We got payroll, last day of the month, people getting paid tomorrow. Also, it's also a Friday, so that's a double payroll day there. And so that's going to happen. Why is that an important thing for you to be aware of, to keep note of? Well, if you think about it, what happens when people get paid? Their money goes into their 401k, right? Automatic distribution. Where does 401k money go? Well, it goes into mutual funds. And then where does that money go? It goes into stocks. And does it have anything to do with any announcements? Not at all. It is just a fundamental seasonal cycle here in the market, actually. And the majority of all the gains on the Dow are actually recorded during the end of the month and the middle of the month due to the payroll cycle. So just be aware that it does not mean you should buy. It does not mean that it's going to be an up day. What it does mean is there's going to be a lot of buying happening on an autopilot. And so a bad day can look good and a good day can look great. And or bad day can look average, and a good day can look great. So, but if it, if we get some, interesting stuff tomorrow morning coming out, then that could add to it and help it rally up a little bit. If we get some bad stuff, then that could help stunt any bad information that does come out tomorrow. So definitely keep that in thing. And Italian bonds came in last night and actually did pretty well. They were better than the previous period. They were at 5.82, and for the 10-year bonds, and before that they were at 5.96. So little confidence going on over there that the ECB is going to do something. We'll see how that goes. And unemployment claims came in this morning here in the U.S. a little worse than expected. Came in at 374,000. They expected 370,000. Not a huge, off tick. Basically, we had 372 last time, 366 before that. So it is sort of rising on the unemployment claims side, but it wasn't just a massive difference. We did see a little bit of a sell-off right after that happened. Bounced around a little bit and moved on down. So we'll be talking about it actually hit the standard deviation level, like right on the money. So on the implied deviation level. And tomorrow, of course, we got the Jackson Hole Conference started today. And the big thing, of course, there's really nothing besides that going on for the rest of the day. So that ought to cause some things to be sort of quiet, unless people are getting into positions. We do have a holiday weekend coming up, a Labor Day weekend. And so it's going to be a 3-day weekend. So if there are people that are short, they may want to be covering. If there's people on there, so there could be a lot of activity tomorrow. And the biggest thing, of course, happening tomorrow is going to be Bernanke's making his big speech at 9 a.m. Central, 10 o'clock Eastern Time. And he'll be giving a little speech about the monetary policy since the crisis. I think the most important or most interesting thing about this entire thing is how the chairman or the head of the ECB, the European Central Bank, actually decided to not come to this meeting. And this is like the one meeting to go to. This isn't like your G10 and G20 meetings and all the stuff that are always going on. I mean, this is the event, and he's really backing off. They have a press conference next Thursday, and so that's expect that to cause some volatility. And then of course on the 12th you got the German Constitutional Court making its ruling on the basically is it constitutional for Germans to take on other debt, and therefore is the ESM, the European Stability Mechanism, legal. And it's a pretty big deal because basically what it is making a true Fed, okay? So in that Fed basically have the ability to, print its own money and print as much as it wants to. So there's all sorts of ramifications of that decision, and so keep that one on your radar. But, everybody's just watching that. The other numbers that we have coming out, we have factory orders coming out. Shouldn't have too big of a big impact in and of itself. Really, people are going to be paying attention to what Bernanke has to say. Early in the morning, we will have Chicago PMI. Could see a little volatility off that, and then we could see a little volatility off the University of Michigan Consumer Sentiment Report. The PMI comes in at 8:45, and the University of Michigan Consumer Sentiment Report comes in at 8:55. As far as the overnight session tonight, what's going to be happening, we're going to be having a few different things going on. You'll have some German retail sales. That's going to be important. The unemployment rate for Europe, that's going to be a pretty big deal that's coming out. And they're expecting 11.3%, so a constant rise in that. And it's been 11.2, 11.1, 11.0. And so we're just seeing a constant uptick in the unemployment rate over there. So things are not necessarily improving on the unemployment front. And so that's, of course, if it continues to make that rise, if it's worse than expected. They've been on the money on their expectation pretty much every time. And they actually did go in and they revised the previous number a little bit, but they've been, like I said, they've been on the money. So probably looking at 11.3, which would be a further uptick in unemployment in Europe. And but it's not a massive thing because it's Eurozone labor. It's basically the entire year instead of one country. Another big announcement, if you're looking to trade currencies, U.S. Canadian, they're going to have their GDP month over month coming out at 7:30 a.m., 8:30 Eastern time. So, sort of put that on your calendar in your Outlook or, your reminders or whatever you like to do. I even sometimes draw things on my charts. I put a vertical line on the chart and then write out, what's coming out at that time. So, sort of an easy way to keep, track of things. And so that's really all we got going on. We're going to have that Labor Day weekend. Now, after the Labor Day weekend, traders are going to start coming in full force. And this horrible volume we've seen that's been as low since like 2007. We got to start seeing some pickup starting next week and then full throttle the week after that. And traders coming back from their summer vacations. So get ready for a lot more volume and a lot more volatility right around the corner here. And take a quick look at next week and just sort of see what we got on the roster that you need to be aware of so you can be planning accordingly. On Monday, the Britain is going to have another, they just like to have a whole bunch of these. We're going to have another bank holiday. It's a summer bank holiday. So that'll be, but of course we're also closed because we got Labor Day. So, coming up the week after that. So let's see here. Oh, you know what? I'm looking at the wrong thing. It's just us. It's not Britain that's going to have that. So sorry about that one. But on Monday, yeah, so we have our holiday, and Canada also has a holiday. So that'll, really the Forex markets are going to be pretty, dead to flat with, the U.S. being closed, Canada being closed. Shouldn't really expect anything happening during that time. Nadex will be closed, and as well as, the futures exchanges and everything else. And you can hop on their sites and get details on that, but they'll resume trading full throttle on Tuesday. So I hope all y'all are out there and you're going to have a good weekend. I'm going to have a good weekend. It's going to be my birthday this weekend, and September 2nd. So I love having my birthday on a Labor Day weekend. That worked out really well. I appreciate my mom for timing it that way for me, right? And gives me a little extra time to relax and chill and enjoy myself. And looking over, let's see. So we got that Monday there. That's not going to be like anything big. But we got Tuesday coming out on Tuesday. We are going to have a whole slew of data rolling out. We're going to have construction PMI over in Britain. We're going to have the ISM here in the U.S. And then the Aussie's going to have its GDP. On Wednesday, September 5th, we're going to be looking at the CPI, the services CPMI. So CPI in Switzerland and the service PMI over in Britain. And Canada is going to make its rate statement, basically its Fed fund statement. Okay, so that'll be happening at 8 a.m. on September 5th. So that's going to move the U.S. Canadian, and they'll be announcing the overnight rate, all that at the exact same time. There's actually no reports besides no real bit. We're gonna have the revised non-farm, but it's not the non-farm payrolls. It's the revised non-farm. So unless they make some major changes, that should not have any kind of major impact on the market on Wednesday. So looking for a pretty quiet day Wednesday. And then going into Thursday, now that's going to be a day to be watching. All right, Thursday next week, there's so many things going on. There's going to be the Spanish 10-year bond. There's going to be the French 10-year bond. The bank rate from Britain is going to be coming out, and their rate statement. Also, the bid rate on the euro is going to be coming out. So, all this happening on the same day. Then in the U.S., we're going to have the ADP non-farm employment change is going to come out. And then we're going to have the ECB press conference that's going to come out right after that. And then we're going to have unemployment claims. And then after that, we're going to have ISM non-manufacturing. So Thursday should really be when we start seeing volume going full throttle and all sorts of things happening. And I mean, basically all day long. And then Friday, we're going to see there's a few reports overseas and like employment change in Canada. But right here in the United States, we're going to have our non-farm employment change. That, of course, will be a big number. And unemployment rate. Those two numbers, they're not only are they big and important numbers, but they're also important because they have an effect on a potential, unlikely, QE3 taking place. So I don't see that happening, but we'll find out. That's the biggest number that really is they're going to be looking at to make any kind of determination on that. And, of course, the week after that, we're going to have our Fed funds rate here, and we're going to have the German Constitutional Court and a lot of other activities happening the week after. So that's your fundamental wrap-up for everything that's going on. And now we can go ahead and let's hop over. And like we talked about the seasonals. So, again, make sure you have that one down. You got your seasonal cycle going on. You got month end going on. You got payroll cycle. So all that stuff adding up together could add for a decent Friday. And so we're looking at that. And now let's go ahead and take a look over at our statistics. And statistics, what we're doing is we're looking at implied deviation. This is not the same as standard deviations. And standard deviations are literally looking at several different things, but one of those is they're looking at just past, really, it's almost an average true range band, like a Bollinger Band, things like that. And that looks at really past activity. It doesn't really tell you much about expectations of future movement. And if you use implied deviations, then you're able to actually see not only what's going on, but you actually can see the sort of the band for the day, the range in which the market should be expected to trade. And this is not saying so much that the market is, locked into a channel, but it is to say that you do want to understand that that's where those profit levels are going to be, so that way you are, ready to start tightening your stops. And to give you a couple examples, we can look over here at the S&P, and where its lows at right now is at 1395. And I mean, it just went right down 1397, and as soon as it hit that, it slowed down, and basically just spent a little time here and then start going right back up. And right here, like I said, 1395. The one standard deviation is 1393 as of right now. So just be aware that that's where that one standard deviation level is, and it's only a couple points lower than the low that we had. And one of the things I always remind people is, hey, when we get to like that 70% mark, you really need to be ready to take some profits off. And so, start tightening your stops. And so we did get to that 1397, and there was room to go ahead and take some profits before there was a bit of a pullback. And then looking over at the Russell, I'll pull that up for you here in just a moment. The Russell there is at 814, yesterday's close, and I'll wrap that up when we come right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pezzavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And one of the things we talk about is Nadex. We'll be coming up on that in a second. If you don't have an account yet and you do want to follow along with us, make sure you hop on over to TFNN.com, and right there on the home page, you'll be able to see a banner that says TFNN on it. And, it says Nadex on it. So right here, again, just hop on, go to TFNN.com, and then right here, click on Nadex. Once you've clicked on Nadex, click on Create an Account, and in about 15 seconds, you can have a demo account. And all you need to do is click on Open a Demo Account, put in your username, your first name, last name, phone number, and email address. Hit apply for demo. They'll send you an email in about 15 seconds, and they'll give you a bunch of funny money in there to play with so you can play some trades, test some things out. And also you can fund a live account. I highly suggest you get a live account just so you can see the live market prices without any kind of interference from just demo trades going on, because obviously it's acting like an exchange. And so if the demo trade, if somebody places a demo trade that didn't have in the live market, you're not seeing the live market. So it's good to have that live account. It's only $100 to fund it, and you can get in there and take advantage of it. And you definitely you want to start playing with this. It's I basically say it's time for you to start trading up and checking out some other products. These are not normal times. These are not normal situations, and you need a product that is putting some things in your favor by the sense of limiting your risk, but still letting you have a lot of room to let your profits run. And with Nadex, you don't have to have stop losses. your risk management basically done for you, because the products all have limited risk. And you can trade gold, you can trade copper, silver, you can trade oil, natural gas. You can also trade corn and soybeans. You can go in there, you can trade, let's see, the S&P 500, the Dow. You can trade the NASDAQ and the Russell. In addition, you can trade the DAX and the FTSE and the Nikkei. And you can go over and you can trade the currency pairs like euro dollar, pound dollar, Aussie dollar, U.S. franc, and it's a U.S. Canadian. You can also trade the euro yen, pound yen, and dollar yen. So you have a huge variety. You can start, like I said, with just $100. The platform includes everything you need. It comes in there, has charts built into it. It has the ability, it has live data, all this stuff, and you don't pay anything extra for it. You place all your orders on there. You can do it while you're on, your computer. You can do it while you're on the go on your mobile phone. But wherever you want to do it, you're actually able to hop in and place trades, and even monitor your trades, like I said, while you're on the go. And you can also put in advanced take profit orders ahead of time, so that way, like once you get in, then you can have your take profit order ready to go. And I was working with some other traders last night. We were just going over the importance of having profit goals, because you control where you get in. Talking about whitewater rafting, but you don't control where you get out. And where you get in, so if you think about, if you're going whitewater rafting, right, you're going to get in. You can't just go, you know what, I think I want to get out right now, because you won't be able to get out right now. You're going to have to look ahead and go, okay, now we need to start rowing this way, and basically you have to start making your plan on where you're going to get out. And really, you don't want to hop in the water, whitewater rafting, without any idea of where you're getting out, because you need somebody to pick you up, get the raft, all this other stuff. Well, in trading, you need to know where you're going to take your profit before you get in. At least have a point of where you're going to start tightening your stop, your trailing stop on your profits at the very least. But you really need to have a realistic expectation of where the market's going to go, and that can't simply be, you want it to be more than subjective. You want something objective to help you out. And we're going to be releasing a tool very, very soon. We're on the final pieces right now to actually help you out with that and help you get those numbers, so that way you can have realistic expectations in the market. And we'll be doing more and more upgrades to it. We're going to be adding in, it's going to start off with the Nadex products, but then we're going to actually add in the all 2000 Russell stocks. We're going to add in the S&P 500 stocks. We're going to add in the Dow Jones, the NASDAQ stocks. And then we are even going to have a form where you can if you want to add certain stocks, you can just let us know. And what we'll do is we'll actually get those programmed in there for you, and it'll automatically give you those implied deviation levels. So it's pretty cool. We got a lot of things coming up, and just can't wait to get all this launching and rolling here on TFNN. And so now let's go ahead and let me pull up the charting platform here, and let's just check out the deviation levels. So we already covered. Let's see. We got the S&P. We already sort of knocked that one out already. Go ahead and check out the Russell. And on the Russell, with the close yesterday over here on 814, we basically had an expected move down to, let's see, one deviation would have been 805.16, and or 805.2, I guess, if you rounded it off there on the way that it ticks. And it came right down to 805.9, stopped and chilled out. So probably done for the day right there on the Russell 2000. Hold right there. We'll come back and we'll look over the other deviation levels and see if there's any opportunities yet that have not been exhausted.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And I'm going to go ahead and go in. We just wrapped up the Russell. It stopped right there at a standard deviation level. Then its tracks went back up, and it sort of flattened out right there. And we got the NASDAQ. Let's go ahead and check that out, see how it's looking on a day, and see what the deviation levels look like for it. So it also fell down, and let's see here. We got the E-mini NASDAQ, and it looks like it's down at 2750 as a low right now. So 2752 is actually the standard deviation level. So it broke that, and right there, about 2752, broke it, popped back up, came back down. It's actually sitting right around that level right now. So if it does continue to break, it could drop to 2723. I don't really see a lot of news in the market that's going to make that happen, though. So I think we're pretty much done and flat on the NASDAQ for the day. Let's go ahead and check out the Dow. And it's really helpful when you see these. I hope you're starting to understand, like, when you know where that level's at, then either you can reverse right off of it, take your profits, tighten your stops, any of the above, a combination of all of them. But you definitely, that's your proper expectation. And this proper expectation is really helpful in picking spreads. I was looking at some spreads this morning, and I had to move about 3 points on the S&P to make money on the trade. I wanted to go short on the S&P. And now there's more than one way to do it. This was just one example. And one of the spreads I was looking at, and not all of them had to do it, but one of them had to move 3 points. And basically that would have put it like 1 or 2 points above the standard deviation level. And I was like, you know what, I only have the chance to make a couple points on this trade based on my expectation of movement. Therefore, it's probably not the trade I want to do. And so it lets you know, it helps you pick the right spread, the right binary. If you're not even trading those and you're just trading, let's just say outright stocks, futures, forex, whatever, then it helps you know where to realistically set your expectations, not just, I hope I make, a ton of money, but, where should I really objectively be looking at where the market's going to go to. So now let's go ahead and we'll hop over. We'll check out some copper right here. And on copper's moved down to 3.447. And, it's flat on the day. When it did go up, it went up to 3.495. I'm in the overnight there right before the market opened up. And then came on back down. And I want to say, let me check out the fundamental reports there from today and see if I see anything that could help contribute to that. And we could, just see if there's a learning opportunity in this. But I don't think, we didn't have any big housing things. Whenever there's a housing announcement, new home builds, permits, things like that, that pending home sales, that's a great time to trade copper because copper is obviously very, very dependent upon the housing market. But anyways, it went on up to 3.495, and looks like one deviation would have been 3.50. So it was literally just half a tick, okay, or one tick right there. This, whatever, 0.005 away from hitting its deviation level, and it would have been a great shorting opportunity, as you can see. It just turned around and just fell right back down, and basically fell back down another deviation. So, I just wanted to sort of display these to you because we're about to let this out and release it, so that way you can see everything. And then over here, let's check out gold. And on gold, we got, let's see, 1663 right there. And so closed it yesterday. And looking at it, gold sort of flew up and then flew down both. So let's check out the up and the down moves. All right. Well, a half deviation up would have been 1668. It hit 1666. And then it fell down to 1652. And 1652.47. Okay, that's the number I have right here. 1652.5. If we round that off, would have actually been the low of the day, the expectation of the low of the day. And it literally came at 2 ticks below the low expectation on the deviation before it turned around and flipped and moved back up. So that was a perfect opportunity to go long on that. And, so again, when you get to the half deviation, you're looking to tighten stops a little bit. When you get to 0.7, you may want to take some profits. Definitely tighten stops. And then when you get to 1 deviation, you're going to want to take a chunk of your profits. And if you want to leave any on, you can. And you may want to look at going the other direction as well, like starting a sort of a straddle at that point. And so now let's go ahead and, these are just nailing it right on the head. Let's go over and check out silver. And on silver, what we got going on? Well, silver right here, it closed out at 30.84. And yesterday, it went down to 30.265. And that's a pretty big move right there. That's just a massive drop. So, yeah, we got a 1.5% move. So literally almost pretty much off the charts. And I'm just trying to see if we can find a good marker on it, 30.265. Yeah, that basically just broke all the records right there. There was just no way to even gauge that one out. So, I hope some of you Tiger and Tigresses out there got a hold of some of that silver play because, man, when it went hard and strong, and that's a lot of money to be made. If you were short that trade, I wish we would have got that one this morning. And so we got silver right there. Now let's go ahead and let's check out. And by the way, I'm big on trading silver on the binaries, not as in favor of trading it on the spreads, just because I don't like the way it ticks as much. But with that kind of movement, it would sort of take care of itself. And I'll go over to natural gas. Natural gas, sort of a little bit of a shock on that. It actually had an inventory report that came in a little higher than expected. Yet it decided to rise. And you can see right here where it dropped down, popped back up. And so on that natural gas report right there, we were not expecting moves near that big in that direction at least. But nevertheless, it went that far. It went on up to 2.76. And 2.753 was the 0.7 point where you would have started definitely tightening your stops if not taking profits. And that didn't quite reach a full deviation level of 2.782. And so now let's go in and let's check out our oil contracts. And on oil, it had a massive drop this morning. And So if you were able to take advantage of that, that is awesome. And then, so what should you expect right now? Went down to 93 at 95. And that's just that's a big drop. And one standard deviation actually would have been 93.72. So even on that, even with that massive move, it didn't quite finish at standard deviation. But at 94.25, we would have started to tighten our stops. So like right around here, we would have started tightening. And then we got stopped at right around 94.11. And it popped back up, and now it's coming back down. So, they just have these proper expectations in all the trades that you're doing. Because without having proper expectations on profits, you're not going to get it. And one of the sayings I remember a manager of mine used to say, which was, she was a little crazy, honestly, but she was very good at what she did. But one of the things that she said that really resonated was you only get what you inspect. So don't expect to get what you don't inspect. And if you don't inspect it, if you don't go in there and go, okay, what should I, think this is going to go to, then I shouldn't have any expectation. You're really just, buying and hoping that it goes in your direction. You're selling and hoping. And Nadex will take care of the emotion side of trading for you. It will help you with your trades as far as your risk management side. But you have to really focus in on your profit management side. And the only way to really control your emotions in trading on the profit management side is to have an expectation and a plan of what you're going to execute, not after you're in, but before you get in. And because you do it before you get in, then you can set that objectively. Once you're in, the emotions are flying, and the fear and the greed is taking over. So you don't want to let that happen. So have that plan before you hop in the market there. Now, if we look on over at ZC, and on if you don't know where you want to get out, don't get in. Is basically the lesson. All right. So corn right there. If we're looking at corn, we got corn sitting at closed out. Let's see 810.25 yesterday. And with an expectation on the upside move, it had moved up basically one standard deviation, or half a standard deviation. Didn't move that far. But at that point, again, remember, we start tightening our stops at 0.5. We tighten them a lot at 0.7. We take them at 1. And it came 17.67. And we were getting right there. So the oscillation level, it slowed down. I'd probably be looking to start taking some profits at this point if I was long on corn. And so you may want to be checking that one out. And then over on the soybean side of things, soybean looks like it had a pretty decent move there. It closed out yesterday at 17.63. It's moved up to 17.71. And so really, with that move, that's really not even touching its deviation level. There's a lot more expectation built into soybeans. So it has a lot of room to go. It could literally move another 8 points before the day is out. And I would just definitely, you can see a solid trend line right there. I'd definitely be, just sort of, I'd have at least a stop right here, and maybe, just moving it up slowly but surely. And I'll back out to 5-minute bars, give you a little more accurate picture. But you can see how it sort of moved up, and it's just sort of slowly trending. But it does have the room to move at least another 8 points up before the day is out. And so that's the November contract. Let me look over at the September contract. Now, the September contract, which is a lot lighter in volume. This is the market right now that you're trading if you're looking at Nadex. Let me see. Let's pull up the Nadex platform. Let's see what contract it's on right now. And for the corn and soybeans. So we hop on over here, and the way that you do that, hit refresh, it'll shrink everything for you. Go to commodities, bull spreads, and then go to corn, and then just click on like daily, and then you'll see September. And then over here on soybeans, you can see the same thing. Click on daily, and you'll see September. So now that you see that, now that you know, okay, we need to be looking at the September contract, then what is the expected move on soybeans on the September contract? And it was a move to 17. Remember, we talked about this a second ago, 17.79 or 17.80. So right now, it's time to take profits on soybeans. So they're pretty flat on that. And I want to make sure we go back and look at corn again and look at the futures contract that the Nadex contract is mirroring and see how that's skinned out there. So on the corn contract, we got it at 8.10, and move up to 8.17 would be a half a deviation. So if you're in that, you're looking to tighten your stops right away. So it may fall back down, it may keep moving, but definitely tighten your stops. We're at the half deviation level right now on corn. And if we hop on over to, let's look at some currencies. We'll hop on to Euro Dollar and see what we get on Euro USD. And on Euro USD, what we can see is, let's see, we got it closed yesterday at 1.035 or 1.350 there. And, I'm going to make sure I got the right one. That'd be 1.0315, right? That'd be nice, huh? Anyway, so yeah, we're looking down, and that's basically stocked right out of its deviation level. And we'll hop on to the pound and see what we can find here. And yeah, 1.2495. Yeah, so basically it's not doing a whole lot yet. And we'll go and check out the pound. And we'll look at some examples of ways that you can place trades to get ready for the upcoming day. So that way you have some ideas in your head of what you could do with that demo account that you've been signing up with there. Nothing really to report on that side of things. So with that, let's go ahead and wrap that up. Let's go ahead and move forward and check out the Nadex platform and trade setups based on just some of the fundamentals that are coming out tomorrow. We get the unemployment claims coming out in the morning. We had the unemployment claims come out this morning, and then tomorrow we have the Bernanke speech. So the Bernanke speech is something we want to be ready for, right? So we want to be able to take advantage of that. That's going to happen at 9 a.m. Central, 10 o'clock Eastern time. And there's a lot of different ways that you can play it. Nobody really knows what's going to be coming out of that, speech, good, bad, ugly, whatever. But obviously, everybody's sort of setting up for a potential bad. There shouldn't be a whole lot of happening. When you're doing your trading tomorrow morning, it's probably going to be pretty flat until he starts talking, okay? And so don't have these big expectations of movements right out of the gate. I'd be more concerned about what happens after he starts talking and, following along. And, of course, be here on TFNN, and we'll be guiding you through some of the stuff that's coming out on that. But when you go in, and what I'd probably do is I'd be looking at doing a straddle, okay, and straddle on the Nadex spreads. And I would probably want to make sure I get one that is somewhere around $18, $20 in price. That's going to expire at the end of the day. I want to give it time to go. And so if we're looking at, say, $18 on each side, 18 to $20 on each side for a binary on the daily binaries, then, that's a $40 risk. And then I'd set one side, I'd set take profit orders on both sides to take profit at $80. I'm not going to wait until expiration. And so that way, if he starts talking to me, this thing starts flying up, you get one side filled, flying down, you get the other side filled. And I would focus probably on the currencies, just to make it a little more simple, a little more impact, simply because obviously the euro is a big issue going on right now. And then, Bernanke's talking, which is going to be about the dollar and his expectations for Europe and the whole fiscal crisis and everything else. So we put all that together. A straddle is going to be your best bet, and a straddle that you're looking at a daily trade, meaning you're going to let that thing go out till 3 o'clock Eastern time. That's when the forex spreads expire out. And so the straddle trade would be my trade pick of the day for tomorrow. And so again, you can look at that on euro dollar. Pound dollar had some definite big moves today, but we're on euro dollar. Is that this drop, and so hopefully you weren't in the wrong side of that one when it went on down. But anyways, so that sort of concludes our wrap there on tomorrow's expectations. And now what I'd like to do is go into just some basics for some of y'all that are newer, and just talk about what the spreads are, how they work, and talk about this sort of laying it out. And I'm going to go ahead and pull it up, and then we're going to have a commercial break here in a minute, but I'll go ahead and get it set up and ready so you can sort of see, how would a spread have worked out if you would have, let's just say, went, short this morning, okay, on the euro dollar, and what could you have done? When you come back after the commercial break, I'll go through that example with you step by step. Stay right there, folks, and call in if you have any questions, and I'll see you right after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. Well, I think we're going to wrap up with just a basic short lesson on how the box spreads work for those that are new. And we'll sort of back up. We're going to go back in time here a little bit and look at this morning what would have happened if you went short and what would happen if you went long, so that way you really understand both sides of the trade. This morning we're sitting right here at, let's say about 8:30. We're sitting right at 1.2540, right? Well, we have three spreads, and this is really good for you to understand how this works. That went 1.2540, and I'm not quite sure there with the mic, 1.2540 up to 1.2790, and then 1.2540 down to 1.2290. Where do these numbers come from? Where do these spreads come from? Well, it tells you right here, 250 points. They're always 250 points wide. They always open at 7 and close at 3. Okay? And so what they do is they take it, where is the market price at when it opens up? They add 250 ticks above it and 250 ticks below it, and then they have one that straddles it, 125 above, 125 below. So at 1.2540, then what you do is you go over here and we just throw a quick rectangle on the chart and pull that up. Gotta find the rectangle option. There we go. And so we go, okay, 1.2540 down to 1.2290. So I mean, just way down there. All right. So we'll just pretend that thing's going all the way down. And what this allows you to do is actually go short and write it down. And when you got in the trade, what we can see is, let's say right here, you can actually pull up the chart, which is really helpful. You can actually see the chart. This isn't the underline. This is the spread itself. But we can go back and see, yeah, they're not pulling all the historical data in there. But that's why we have another charting platform in addition. But you could have got in this, and it would have been about 3 to 5 ticks off at least. So you've probably been looking at about 1.2, let's just say, we'll make it 10 ticks, 1.25, 30, okay? And then right now, if that was where you got in, so if you got in at 1.2530, so 1.2530, and then minus it from 1 point, and we'll say where we are right now, 496. So you actually would be up, let me do that one more time, 1.2530 minus 1.2496. Okay, so 34 ticks. So you'd be at like a 10 pip risk with a 34 tick profit. So a pretty cool way to place a trade, and you could have been actually even higher depending upon where you got out at. But I'm just sort of taking current market price and assuming that you got in, this started breaking down and went below this moving average here. It's a 200 period moving average. So once that happened, it broke below that, you went short. You could have done that any of these times and got about the same fill price. Okay. Now, what if you would have, for whatever reason, you think it's going to bounce off of it? You would have bought one that's the 1.2540 up to 1.2790. So hopefully you're starting to see why I call them boxes now, because if you put them on a chart, they're going to look exactly like a box. And so this is basically where you get in. This is where you get out or where it expires. This is the floor. This is the ceiling. Okay. And so if you bought the 1.2540 to the 1.2790, let's just say you bought that one at 1.2550. We'll throw 10 ticks in there. Then you would have lost 10 ticks, okay? Lost 10 pips, $10 per spread, and it kept going down. And no matter what, you won't lose more than 10. What the cool part is you have till 3 o'clock for it to come back up. And will it come back up? I doubt it. After that big drop this morning, we're going to have a big rise. But if it did move back up, then we'd be able to take advantage of that and hop in. And thing is, you don't have to place that trade again. So because you're still in, you're down, but you're not out, and you have until it expires. This works just like the underlying markets. We're going to go into more of that tomorrow about how you can really use these to replace or hedge the underlying market. Have a great day. I will see you tomorrow.